Hello again, fellow BeachBum traders. Thank you for joining us for the live stream of part 2 of our weekly trading game plan for the week of June 13th through June 17th. And you can see some of the individual stocks that we're going to talk about. If you're watching the replay of this video, thank you for watching the video, and we'll go ahead and get started. So again, in the description box below, you can find a link to a Google Drive where we're storing these notes now, and you should have access to the notes for this weekly trading game plan and some of our previous ones. If you have not already seen part 1 of our weekly trading game plan for this week called Preparing for the Economic Hurricane, we would highly recommend that you also view part 1, as this will give you the market data, the market analysis that is the input for our selection of stocks for our watch list for this week. So again, we'll get started looking at what we're going to put on our watch list for this upcoming week. It also talks about some of the economic data. We have the Fed meeting on Wednesday, and we expect some potential volatility during that, preparing for that Fed meeting and during that Fed meeting. So firstly, we'll talk about some of our updates for some of our trades from last week. And good morning, Tanvir. Thank you for joining us from DC. Glad to see you again. So our first trade, and hopefully if you've been a member of our channel for a while, and if you're not, we hope you'll choose to subscribe. But you know, we've been scalping natural gas, shorting natural gas using cold for some period of time. And we added another scalp on 6/8. You can see we added at 698. We stopped out at 1892 for a nice 11% profit. So congratulations to all of our other fellow BeachBum traders who also profited from that scalp. And as you'll see, we're continuing to watch the price of natural gas. If it spikes up back over that 950, 960 range, we'll do the same thing again. We'll add a scalp using shorting natural gas when it rolls over, using cold, take our profits, and continue to do that until natural gas eventually completely rolls over. So also, one of the things we did late last week, and we'll talk about this in our watch list a little bit, is in the past you've heard we did a swing trade on BTI, made a very nice profit, and recently with the market decline again, we're looking to again go long a big position in BTI. So we put in our buys, our good to cancel buys, sitting at this 190.66 area, and we're just waiting for a dip in the markets to pick up those buys in BTI. And again, you know, we're primarily swing traders, so we're not necessarily sitting in front of the screens all the time. And so, you know, I'll lead some of these trades by putting in a buy at or a sell at a position that I'm happy with. And then I'll go to the beach, and if it hits, great, you know, I'm happy with that. And so, again, we have our buys in for BTI on a dip. So another position we did several times last week, and we've talked about this as a great swing scalping opportunity, is the Chinese tech stocks, long and short. So we went long Yang, which is shorting the Chinese tech stocks, and you'll see we did this a couple times. The first time we went long on the 6, and then we got stopped out, made 2.5%. For just like a day or so, because we entered on the 6th, exited on the 7th. Wasn't truly a day trade, but we made, you know, nice almost 2.5% profit, which equates to a 75% monthly profit. And then again on the 8th, we reestablished that position at 1176. So one of the things I want to show is when we get to Webull, is I'll show you how the rebalancing in some of these leveraged ETFs can create a gap up or gap down. And I'd encourage you to see our video on, you know, why I get up, my 4 a.m. routine. It's 4 a.m. Do you know where your stocks are? and you can see how I look for a trend, particularly in these Chinese tech stocks, and that will tell me, do we want a long or short Chinese tech stocks this day? And we can also catch some opportunities on a gap up, gap down. And this was a good example of where it gapped down on the 8th. We took that position, and then it ran up, and then the next day it gapped back down again. And so I moved my stop, removed my stop, let it run back up, put my stop back in place. So also, you can get real-time trade alerts from our Patreon if you join our Patreon at BeachBum Trading, patreon.com, BeachBum Trading. We try to post these trade updates as quickly as possible to our Patreons, and then also in the alerts channel of our BeachBum Trading Discord channel. And you can, or Discord server, you can find a link to the invite to our BeachBum Trading Discord server in the description box below. You can see there's a couple channels. One is automatically posted from alerts coming out of Thinkorswim. And when those get triggered, it gets automatically posted to this Thinkorswim alert channel. And then if we take one of those trades, then we will update it there. And otherwise, if we initiate a position that was not a Thinkorswim alert, then we'll post it in the trade alerts channel. So again, if you want to get real-time alerts, join our Patreon, watch the alerts channel in our Discord. So one of the other things that I learned this week in performing those trades that I wanted to share with you all for hopefully your benefit is I got prematurely stopped out in some cases, and in some cases I had to. I happened to get called for jury duty one day, so I kind of had to put some stops in while I was going to be away. I wanted to protect my profits. I didn't want to lose my profits in those, and I was a little bit too aggressive with my stops, and I got stopped out prematurely. So I'm looking at trying to keep my stops for volatile symbols like cold, yang, etc., below the VWAP and or 2 pivot points or levels below the current price target. I'm also looking at the ATR, and I put a definition for what the ATR is, which is the average true range. And I'm trying to figure out, and here's the definition. You can find that in the notes, what the definition of the ATR. I'm trying to figure out a good percentage of ATR to potentially use even as an automatic notifier for moving my stops up and down that will not get me prematurely stopped out when I don't want to, but will still protect my profits when something rolls over. So if anyone else has some experience, some recommendations in those areas, that would be great. Please post them in the comments in our Discord, etc. But typically, I try to stay 2 pivot points below the current price, and I like to see the VWAP cross a pivot point before I move it up. And Tanvir saying C-Web 2x leveraged, bull looks interesting. Yeah, and yen is the one we use, which is the long on Chinese tech stock. I believe it's a 3x, so it's going to give you even more momentum. So now let's jump over to Webull and look at what we're updating our watch list for this week. Just a quick reminder is Webull is still currently offering 6 free stocks when you open and fund a new account. The first 2 are up to $300 each, and the additional four when you fund your account for any amount, even $1, it could be valued up to $3,000 each. So if you're not already using Webull, it's our favorite trading platform, and we would highly recommend, even if you just want to take the 6 free stocks, cash them out, take the cash, you could do that. So again, Webull is our favorite trading platform. And so we'll look at our watch list in Webull. So I'm on the stock screen. You'll see we can have multiple watch lists. It's really easy to maintain the watch list in Webull. It's also easy to track the performance of the stocks during the day in the stock screen, and we use the market screen, etc., also heavily for our analysis. So let's start looking at our updates to our watch list. So we've been watching BIG, which is Big Lots, for some period of time, and it had popped up a bit, but then on Friday it did come down some. And so we're continuing to keep BIG. So you can see it ran up for a little while, and now it looks like it might be coming back down. If you listen to our game plans for the past couple weeks, we like the discount retailers, not the mid-tier retailers. We think luxury retail and discount retail can survive the recession okay, and actually the discount retailers will probably benefit from the inventory mismatches that you're hearing from Target, etc. They also just recently, Big Lots had poor earnings. They had a inventory issue, and they fired their merchandising director. So there's a potential catalyst when they pick a new merchandising director. So again, we're going to watch Big Lots. You can see where we're looking for it to come down to that support level, and looking for a buying opportunity in Big Lots. So one we're adding is an old friend of ours, which is Anheuser-Busch InBev, Bud. We've swung Bud several times in the past, and it looks like Bud is coming down to a support level that looks attractive. So we're going to put Bud on our watch list. And you could see it briefly pierced that support level. Our target price is around 51.45 for a support level, and it pierced that, and then it quickly bounced up. So if we get a little bit of a rollover, we'll go long Bud. Bud also pays dividends, I believe, a quarterly dividend. And you can see our previous due diligence video that we've done on Budweiser in the past. Talks more about their business, etc., why we like to swing Bud. It's a consumer defensive play. It's, beer, and actually people tend to drink as much or more beer during a recession versus good times. So, and with the reopening, we see a lot of positive potentials in Bud. Now they are a little sensitive to inflation, so that's the negative side. So. So we also still have DRIP and SCO on our watch list as the way to short oil. We've talked about doing the same thing we've done with natural gas, doing with oil. If it peaks somewhere 130 or greater, and it peaks and rolls over, we can short either the oil producers or the WTI directly using DRIP or SCO. So we'll continue to watch oil, look for a peak, and add a scalp play on oil using DRIP or SCO. FCAP is a regional bank we've had on the watch list for a little while. You can see they go ex-dividend on the 15th. It's payable on the 30th. So we moved it up from the bullpen. We'll keep an eye on it. If you want to get that dividend, again, you need to buy it before June 15th. And then we've been talking about trading volatility for quite some time, and this is probably one of the best opportunities this week going into the Fed meeting. We expect it to cause significant volatility. We saw the CPI data cause volatility. VIX spiked up to around 30, came back down pretty quickly. And if I look real quick, I'll see where the VIX is right this second. It's 27.75. So it had come down below 25, that popped up to 30. Now it's in the 27s. If we get unexpected data from the Fed meeting on Wednesday, or Powell says something that shocks the market, we could expect a spike in the VIX, and in that case, we would be looking to short the VIX using SVXY. Again, this is great for day traders, momentum traders, scalpers, etc. Is you can ride the VIX up using UVXY and then short it back down using SVXY. So. Also, you can see more details that we've talked about this before in this previous weekly trading game plan for May 30th. So again, we talked more about other ETFs to trade volatility, etc., and why we're looking at UVXY and SVXY. We talked about the fact that we've got buys in position to re-long on BTI. You can see there's we have the buys sitting there. Again, these are swings as long as we're in a bear market and the market keeps going down and then swings up on these bull rallies and bear markets. We'll keep doing this and we'll just keep buying BTI lower, swing it up to a peak, sell, and then again buy it back. You can also see our previous video on why we like VTI versus VOO or VT and why we're using that for these swings. And then we also talked about Yang to short Chinese tech and Yin to long Chinese tech. So, and it looks like I've got those backwards, so I'll change that. Yang is the short and Yin is the long. And again, this is great for day trade, scalping, etc. On a given day. These tend to, one of them's going up any given day, depending on the news. Is the Chinese reopening? Are they locking down again? What the Chinese party say, etc. And then even intraday, you could switch these guys and go the other way. So again, there's ways to make money in this market. There's ways to make money in any market, and there's plenty of volatility to play. So again, there's plenty of opportunities to make money. And also we post updates again to our Patreon. If we make intra-week changes to these watch lists, we will post those as quickly as possible to our Patreons and also in the stock watch list channel in our Discord. So you can see we also have stock watch list channel in our Discord, and we'll post any changes there as well for our Patreon members. So if you're not already a member of our Discord, it's free to join. There's an invite in the description box below, and I'll try to put that up on the banner a second. And we hope that you'll join us. Try to build a community of BeachBum traders that help each other succeed in their trading careers, and we will help as best we can. So I'll quickly go back to Webull and we'll just review very quickly what we've got on our watch list. We talked about Big, talked about Budweiser, Anheuser, InBev. Again, it's a dividend paying stock, consumer defensive, etc. Talked about DRIP to use for scalping, shorting oil. FCAP is our, again, this is a low float regional bank, so you see it's kind of choppy. We didn't catch it at this point, but if we can catch a price, it tends to have a pretty significant spread, price spread. So you have to kind of watch that as well. But you can see it's held up pretty well. Same thing with Franklin Wireless, FKWL. It's held up quite well, even though many of the other stocks broke down in the bull market or the bear market, I mean. This guy's holding up pretty well, so we're looking to long that. Java is coffee. We like this guy. Again, another kind of consumer defensive. It's run up a little bit. We'd like it to come down a little bit. And I did think about removing it, but we'll give it a shot and see if it comes back down a little bit. And we talked about Cold as a way to short natural gas. You could see they did a reverse split, so it rebalanced the share price. So that's what that big jump up is. So we talked about coal. We talked about SCO is another way to short WTI directly. Talked about using SVXY to short the VIX, UVXY to long the VIX. We talked about our buys, our good to cancel buys on BTI. And then we also talked about longing and shorting. And Tanbeer's asking about Tesla's split as an options play. Boy, I think it's going to be very volatile. I have not traded Tesla. I think it's too expensive. Again, my opinion. This is not financial advice. This is just my opinions for educational and entertainment purposes, but I have not bought Tesla because it's very volatile and very expensive. Now, if you're playing options, that the volatility may be in your favor. Again, that's not something that I have experience with. So I don't know. I think it's going to cause a lot of volatility is what my opinion is. And I think it's probably pretty risky, but if you're very nimble and that's your thing, then if you can make money at it and that's the way you make money, that's great. Same way with the other splits is we pretty much the Google, the Amazon splits, they ran up when it was announced. So we're not going to chase things like that in general. So we haven't really chased any of those. So it looks like my Weeble is having issues loading right now. It's a bandwidth issue. So I'll go back to my document and we'll talk about our bullpen. So we do have a new stock we're adding to our bullpen. This is a new ETF that I found. It looked attractive. It is on dry bulk shipping. So it's an ETF comprised of these dry bulk shippers. It looked like it was coming down to a support level. And so we're going to put that in our bullpen. And let's see if I can get this guy to load. So here's another way you can see your stocks, and this is a great way to watch them during the week, is if you go to the Watchlist tab in Webull, you see the little mini chart, heartbeat type chart, and you can see, if they're moving up, down, etc. So again, during the day, this is a great way to watch your watch list. So we could see that. There we go. So here's BDRYs. We see it came down to support, bounced up a little bit. So it's a little above where I'd like it. But if it comes down to this 19, you see it's been kind of breaking down. I mean, bulk shipping, dry shipping rates were very high. They've come down, but there's a nice risk reward opportunity in the BDRY. So we're going to keep an eye on that one to see if it comes back down. If so, we'll add it again to our watch list to try to long BDRY. Now, cryptocurrency. I'm going to just briefly talk about cryptocurrency because they're pretty much breaking down pretty severely. I'm going to take Bitcoin off our watch list, off of our bullpen. Right now, it's showing at 28,725 right this second. It's just not something we're going to buy. It doesn't have a utility. I don't have a use for it. It's breaking down. Everybody's talking about crypto winter. So I'm just not going to chase that. Ethereum is also breaking down. I like the utility of Ethereum for minting NFTs, but I have a question for you all. If anyone knows, if I were to buy Ethereum, because it's being held by a holding company versus buying the coin and having, I don't think you have to get the keys when you buy it in Webull, and I need to do further research on that regard. But if I buy it Webull and want to mint in NFTs, can I do that? And if not, then where should we buy Ethereum so that we can mint NFTs? So really, that's the main reason I'm watching Ethereum, is to buy some to eventually mint NFTs, probably not in the near future, but I just want to buy some cheap. Because again, I like the utility of Ethereum, but in general, cryptocurrencies, they're breaking down. People are talking about crypto winter, and it's just not. It's very volatile. It's not something we're going to chase at this point. So last week we added Ford to our watch list. It's a little higher than where I'd like it, but it does look like it's coming down. So we've got it in our bullpen. If it does come back down, we'll move it up to our watch list and maybe get long support. Another old friend we're going to add back to our watch list. So we moved FCAP up to our main watch list, a real-time watch list from our bullpen this week. We're going to take Grow off. It ran up already. Doesn't look like it's coming back down. So we removed Grow from our bullpen. But one we're going to add back as an old friend is Realty Income Corporation. If you've been around for a while, we've swung numerous times. It's a REIT, monthly dividend paying REIT. Their ex-dividend is usually right at the end of the month, so you want to buy before the end of the month if you want to get the dividend for that month. If we look at real quickly, we can see it's coming back down. It had run way up. Now it's coming back down. I'd like it down here, but anywhere 65-ish or below, if it turns back up, we'll buy a big chunk of again. Again, I think this is a good recession hedge. They pay the monthly dividends. Their real estate has pretty good occupancy. This is not individual homes, etc. This is commercial real estate. It's global. They've increased their dividend. They're a dividend aristocrat, so they've increased their dividend for years and years. And it's one of the more popular dividend aristocrats as well as REITs. So again, we've owned them, swung them, collected dividends, and then when it peaks, we sell it and buy it back again at a low point. So we're getting the price appreciation as well as the monthly dividends. Please cover wheat ETF. Yeah, we can look at the wheat ETF, Tanvir. Let me bring it up. And here's how you can look at any stock in Webull on the stock screen. Just put the ticker in there. Just click on it. So the wheat ETF, I know, is, a general grains ETF. Let's zoom out a little bit so we see a bottom at 10. So it looks a little bit high. Might be something to watch. It's kind of in the middle here. So, right this second, it did bounce off this pivot point. It does have, $3 range, 3 up, 2 down. So the risk reward's not the greatest right this second. I would want to see it either go up, and I don't know of any ETF to short grains. I'd love to know one to be able to ride this back down, and I don't know of one. So, if it gets momentum, if you're a day trader, momentum, it might be worth trying to ride. But right now it looks pretty flat, and it's kind of sitting in the middle of the range. It's not real great risk reward. So, and I look at the futures. You'll see in part one, I look at the futures, just kind of see where they're at too. And then if I see a future or a commodity that looks attractive, that it's at an extreme, then I go find the ETF to play it in the direction of the extreme that I want to play. So yeah, I've been watching grain, as I mentioned in part one. For some reason, live cattle had run up, so cow is one. That's probably high right now, but I don't know of a way to short cattle with an ETF right now. So I hope that helps. Does that help, Tanvir? So I was going to take Roku off the bullpen when it ran up on that Netflix buyout rumor news, which just in my humble opinion, I don't think that would be a good pairing. One of Roku's benefits, and you can see our due diligence video on Roku, but I think one of their competitive advantages is that they're platform independent, and tying them to a single platform doesn't seem to make a lot of sense to me. So, I haven't heard anything further about that rumor, but it did run up on that rumor and then has been coming back down. Obviously, it gets pressured a lot as a tech stock. But again, we like Roku. It does seem to be stable, which is good. So it bottomed, and it does tend to pop up off these support levels pretty quickly. So when we do get alerted that it comes down, we're going to want to jump on that pretty quickly. So We see even in these interim swings, there's some nice profit potential, 20, 25 per share profit potential. So that's nice. So we'll keep an eye on that. Another opportunity, it's not great right this second, but semiconductors. We were shorting semiconductors, and we pretty much broke even. I can't even remember. We might have made a little bit of money. It wasn't great at the time. But these guys are swinging back and forth pretty regularly now. And again, as a day trade, scalp trade, momentum, we're in this choppy pendulum-like market, I think there's opportunities in semiconductors, swinging them back and forth with SOXL, which is the long on semiconductors, and SOXS is the short on semiconductors. So again, I'm watching it. I'd kind of like to see one or the other go to an extreme before I jump in heavy on whichever one that is. So that's why I'm watching them in my bullpen. And if whichever way it goes to an extreme, then I'll play it the other way. So, and we'll swing them back and forth. That's fine. Another one we're putting back on our watch list, really for your benefit, is Stag. This is an industrial REIT, so it's another REIT that pays a monthly dividend, a nice monthly dividend. Tends to go ex-dividend towards the end of the month again. We already have a pretty sizable position in Stag, but you'll see it looks like it's potentially becoming attractive again in this 31-ish area. If it comes down to this support and you're looking for another REIT, monthly dividend payer, again, these are industrial, like distribution centers, warehouses, etc. So this again, it's not a mortgage-based REIT. We're staying away from mortgage-based REITs, but the ones that are commercial, industrial, again, not office space, but again, the need for warehousing and distribution centers, etc., isn't going to go down. In fact, the issues with the supply chain creates demand for having more warehousing space as they try to iron out these issues. So you might want to take a look at Stag. We may take a bigger position in it if it becomes attractive. So we've been watching treasuries now. The Fed has begun selling off their treasuries. We may hear on Wednesday that they may accelerate their quantitative tightening, which would pressure treasury prices down even further and yields up further. Or again, the interest rate shock, if Powell comes out with a 75 basis point or whole point interest rate hike, that may shock the market. You might get a risk off, which would drive prices up. But otherwise, if they announce further quantitative tightening, that might drive prices down. So we're not going to take a position in treasuries until we kind of have a better feel for what's going to be coming up. But once we see an extreme, and I was looking at 2-year treasuries because it looks oversold severely, but I need to find an ETF that I can play that successfully with. So we'll keep an eye on that. But again, listen to the Fed decision on Wednesdays. That's going to be very important. You're probably going to see a pretty dramatic reaction in the treasuries. So again, if you want to try a day trade, scalp trade in treasuries on Wednesday, I think there's going to be opportunities there. So we talked about Yang and Yin. They were in our bullpen. We moved them up to our main watch list to trade, scalp, etc. as frequently as we can. So another area I wanted to share with you is we've been talking about retail in our strategies in our part ones, and then with the Target thing, I was really, when I heard about that, I was looking for a way to short those types of retail stores. And I couldn't find a direct one to short retail stores, but I did find this Click, CLIX. And essentially, it's long online e-commerce and shorting brick and mortar stores. So we've added this to our list of ETFs. And Webull, we have another watch list that is all the ETFs that we kind of keep an eye on. So you can see we've added this Clicks to our list. It's not really at an attractive price right now. It did pop up on that target news, but that gives us a way to potentially short retail if we keep hearing these mismatch inventory issues. So TTL, what is TTL? So Tanvir is asking about TTL. I don't know. Is it this one, TTL? It says TTO. Is that what you meant? Oh, TLT. Yeah, that's the standard Treasury guy. It's a standard 20-year Treasury. So again, there's the Fed selling off Treasuries, so and this is on the price, so I would expect it to continue to go down as long as they're selling off Treasuries. So. And someone, I think Tanvir or so we were talking about the defense and aerospace contractors, and you'll see that part ones of our game plans as another potential recession hedge. And someone found this DFEN ETF to play defense and aerospace. So, and it's a Bull 3X. So it's a leveraged ETF again on aerospace and defense companies. It's probably not very attractive right this second. They're probably already run up. I haven't looked at it real recently. But we can take a quick look. So again, I've added that to our list of ETFs so I can quickly jump over, see how they're doing. But again, this is an ETF that it's a 3X long on defense and aerospace contractors. Another one we found is RETL, and this is a 3X long on retail in general. So once retail bottoms, sometime in the recession, etc., if we want to try to long retail in general, we could use this RETL. Now, this is probably a shortable ETF. We can't really short it in our retirement accounts, but if it is a shortable ETF, then you could play that ETF short. It's a Bull 3X. So and again, as I mentioned, I'm looking for ways to long those 2-year treasuries because that looked like an extreme gap down. So. Would you short TLT then with QT? Not sure what QT is. Let me bring up FinViz and see if I can look at that. And also, I'll bring up if I can. I don't want to run too long today, but if I can get my ETF spreadsheet up, then we can look at that as well. I'll show you what I use for treasuries. Okay. Yeah, I think I'm overloading my internet. Okay, I'm going to have to come back to you, Tanvir. I'll take a look at, quantitative tightening. Would you short TLT then with quantitative tightening? Again, that's a little risky because as you've seen what they're doing, it's kind of crazy with bonds is when you get one of these risk-off days, it's, again, I've talked about this for a long time, is when the mutual funds or the algorithms go risk-off, they just automatically sell stock, buy bonds, which drives the bond price up, which doesn't make any sense given that we know the Fed's tightening, we know they're selling bonds. But again, when they throw that switch and they go risk off, bond prices are going to pop up. And you can see that the futures of the bonds. So it's kind of risky to short them. Is if they throw that switch on you, and you're shorting the bonds, you're probably going to get stopped out pretty quick, or you're going to lose pretty quick. Now, they're going to turn around because, again, then people will figure out, oh, it's quantitative tightening. I should be, selling bonds because the Fed's selling bonds and the prices are going down. And then we see the yields go up to, 3%. So I hope that answers your question. I think it's a little risky right now to play them either way. I'd really like to hear what the Fed's going to do, and I'd like to see a bottom, and then we can swing them going up. So see if I can get my spreadsheet open this time. So here's you've seen this in several of my other videos. I'm building a new one and consolidating that hopefully I can share at least with our Patreons as to all the ETFs that we use. And so what I do is then I could go and given any category I see attractive in the like in the futures, I can go to this ETF spreadsheet and I can say, okay, what ETFs do I have if I want a long or short? So for example, if I wanted to short 20-year treasuries, I would use TMV. So that's what, if I wanted to short 20-year treasuries, I would long TMV. If I wanted to, or I could also use TTT, and you could see the risk reward profiles for each of those. Similarly, if I wanted to long treasuries, I could long 20 years using TMF or the 7 to 10s using TYD. So those are kind of my preferred ETFs for playing treasuries. Again, that's when I see the opportunity, and there's a good thesis and a good strategy behind it, which right now we're just in a wait and see mode. So I hope that also helps. So again, I'll try to wrap up pretty quick. We also have, more information about recession proofing and inflation proofing your portfolio, which I highly recommend to use to cull, your shopping list. Go through your shopping list stocks, make sure they're going to be inflation proof, recession proof, etc. You can see more information in this previous video about all the different strategies we have for that. And then I've got a question for the community. Please, in the comments or in our Discord, given these swing opportunities where one side, the long, will be positive and then it'll roll over and you're going to want to short. A good example is the VIX and longing and shorting the VIX. What I'm trying to figure out is there a way to set those orders in advance so that if I'm longing the VIX and it goes up and I put a stop in underneath UVXY and that stop gets hit, that says, oh, that's a good short opportunity. So right there, I'd love to open a long on SVXY and vice versa. So the question is, does anybody know if there's a way to trigger a buy on a different symbol based on getting your stop hit on one? So if I'm long UVXY and it rolls over, my stop on UVXY gets hit, how do I trigger a buy on SVXY without doing it manually? So previous metal ETFs, yeah, I'll have to defer that to another video. I have some for various focusing on various commodities on the different, gold, silver, oil, etc. And we have gone over that in the past. But yeah, I'll try to get to that again, or maybe in next week's, if we have more time, I could talk about those as well. Another question for the community is, this week we did the game plans at 10 o'clock. This was a suggestion from another one of our BeachBum traders to try a few different times to see which was the most convenient for the most number of people. So we created a poll on our YouTube channel, and we'd love for you to vote on what time is best for you all to do these live streams for our weekly trading game plans on Saturday or Sundays. We could do them, pretty much any time between 9 and 11 or so, and whichever is best for everyone. So if you please go to the community tab on our channel, and you'll see the poll. You can vote, what time would you prefer for the weekly trading game plan live streams or premieres. So yeah, please go to the community tab of our BeachBum Trading YouTube channel, and please vote on the poll. And we hope, if you're not already subscribed to our BeachBum Trading channel, that you choose to subscribe, hit the subscribe button. It's BeachBum Trading, and hit the notify bell to be notified as we go live or drop specific videos on specific topics. So we hope you will subscribe. We hope to see you in our Discord, etc. And please visit our homepage at beachbumtrading.com, bum without the U. And again, we look forward to seeing you in our Discord. Also, we do have a Patreon. As you heard, some of the benefits of our Patreon is getting real-time alerts, getting midweek updates to our watch list. It's purely voluntary, but it does help support us to be able to produce frequent quality content. We hope that you feel that this is quality content. So we hope you'll hit the like button. Give us a like, give us a thumbs up, help the YouTube algorithm share this with more of your fellow BeachBum traders around the world, and build our BeachBum trading community for the benefit of all of us. So thank you again, Danbeer, for joining. Thank you for all your questions. I'll try to get back to some of them on talking about the metal ETFs. We'll talk more about treasuries. It'll be interesting to hear what comes out on Wednesday. So we hope to get a clearer vision of what to expect come Wednesday, and we expect a wild ride. I think it's going to be a wild week, but again, if you're playing volatility, or momentum trading or swing trading, these various pairs, I think there's a lot of opportunity to make money. So we're looking forward to it. If we can be of further assistance, please put your questions in the comments below. Hit us up on Discord, in our Discord, contact us via our social media, etc. So thank you again all for joining, and good luck and have a great trading week. Bye.